What's going on, YouTube? It's time for another recap. Hop into her here. Today was another fantastic day as predicted here on the X. We had a very important double algo system here today. Not going to tell you why it was so important to me because we can't do that. We got to get to the premium members. Let's zoom in here a bit. Interesting algo, okay? And I posted this guy for a golden pocket read, so we were going to go above or below, right? Above or below was the call. So what I wanted to see was long first. This was my whole bias today was long. It was not short until $500 cracked on QQQ, and that's what I told my team. So unless $500 cracked, I was not interested in the shorts to the way down. I was only looking long. Now, day trade sentiment for scalps, up, down, all around, we could totally do. But the sentiment macro, the sentiment overall, the macro of the day, long biased, okay? So that's what we told our crew here. We had some good breakdowns in the morning, so let's go over how we predicted it all. So right here, we had the algorithm that I'm speaking on SPY, and there's a very interesting reason why we use a double algo here. Can't give it out on YouTube. You come join us if you want to learn how algo protocols work for us, but here is the trade plan. So the golden pocket, which you guys know very well if you watch this channel here, is the above or below of 61.8 to 38.20. So that fib range right there from 578.23 to 575.08 is the high-low, which gives us the center of that high-low, the Fibonacci 50 plus the 38 and 61. That's going to be their golden pocket. So what happened here, right? Well, most importantly, if you've been watching this channel for a while, we knew the 100 EMA was coming up for the short. So if you were to net like we do, we like to sell calls on call spreads a lot throughout the months and weeks on highs and trend. So if we have an all-time high, it breaks structure, lower high, lower low, lower high. We expected it to come down to get the 100 EMA. We express this multiple times in the channel. Check out our videos from the shying right here, the remounting of support at the 100 EMA, the shy right here. We know the shying to further smashing usually happens. So if you take this play out right here, you look back into the past, the last time we were up and over and shied the 100 EMA and came all the way up to an all-time high and then broke structure with lower high, lower lows, we came down to the 100, even close to shying the 200. So when the pullback correction comes, it's more of a pullback, 8 to 12%. We'll get 8 to 12 from all-time highs. Don't know if it's going to be right now because we're going to pay attention to the January close for the rest of it. But more importantly, we talked a lot for the months of the triple gap system. And we had this big gray box, and there's gold levels here on the QQQ as well, where we said the price action was going to be a bounce point, right? Because we have not one gap, but two gaps that need algo fills. And if you follow algorithms like we do, gaps are the most important thing, period, to us. We also have another double gap up here. So if you're a big fan of the Powell dump, we knew exactly where it was going from this double gap that it was filled already with the wicks here. We actually did a couple classes live here. You can check them out on the channel on why these were launching past the gap, and then this was slamming into the double gap candle, which was the most important thing. Notice where the Powell bottom ended was a floater double gap algo candle. Ooh, super hard. It was cool. It was readable. So next level down is this area right here. This is obviously another double gap. We have it gray boxed right here. So the entire trade plan was to hold the gray box long and run back up for a little bit towards the 100 EMA. That was my main call. Now the scalp for the day trade, right, for the micro in between here, that was it. That's all I wanted to do is long above 575, go to top of the orange box right here, right? Anything else was bonus round. If we happen to break down under the golden pocket, we had a short scenario down to the 1618, great. But macro, if you trade live with me in our Discord, I was all macro long until the QQQ got under its algo today of 500. So we did not see anything under 500. Where's my drawings for this, man? I don't even know what we were on here. Apparently it's all gone. All right. TOS is good for me on that. So 500, right? So the 500, and then of course, Russian here is the 100 EMA daily, right? So go to the daily chart right here with the 100 EMA, obvious bounce point. Very easy. So as we came into that 100 EMA, again, needing a back test because we covered the gap up here, the chop, and then this push right here, that candle off the -1 deviation we seen way back here on 9/11. We broke over this 100 EMA, and then we never came back down. Couldn't go under the 50, couldn't go under the 50, couldn't go under the 50. Finally hit the 50, gave you a temporary bounce, and we seen the high, lower high, lower high into the 100 EMA. Now, this is its first time it's seen the 100 EMA in quite some time, so hypothetically, you'd look for a bounce, right? And SPY had that double gap awareness too, as the Qs is going to most likely hop up here for a little bit and then fall to its 492. But I'm only going to day trade this heavy short once we break the 100 EMA and $500. So the bottom of this algo candle was 500, and that was our biggest over under point. So when you see it get defended, 100 EMA defense, 100 EMA defense, 100 EMA defense, and obviously $500 right there, that is a lot of support from the 100 EMA. We have a lot of divergence and convergence throughout the day, but mostly high, low, high, and highs on the RSI. Big, nice top right there that came down for this structure, and we spent the rest of the day in the top channel of the RSI and the MACD, so we could only assume uptrend. We spent very little time here at the opening morning on the negative side of things. So our trade plan was correct for the macro overall long bounce at there. But most importantly, because the best market is the SPY, we did look at this at the daily gap levels. So this was those massive gaps that we had. 575 was our biggest call, and we said anything above that, we're going long. So we did nail that above the golden pocket as well. So even from here to the orange, we had 28 points. We actually longed more than about 4 different trades total. Golden pocket to orange, that was another 18. I think we caught 13 of those. And then for my chat, I said over under 500. And then, of course, it's just the golden pocket. So we leave these purple boxes right here on the golden pocket. We had the big gray box that you see right here for the daily gap. So anything above 575.64 was going to climb all the way back to the top of that daily gap and then to the 100 EMA, right? So 580. So that was the other main trade plan here as we needed to catch up. Now, psychologically speaking, we have let's bring up the daily notes here in our Discord. We do post the news pieces and everything else. So to look at this in an interesting way here for psychological versus technical, we do have some issues to go over here. And with the news that it's coming out on technical, do we have a psychological catalyst that's implemented on Monday morning here, like a big CPI, a big OFOMC, PPI claims, whatever it happens to be? Do we have a big unit of measure that can affect the market and create large volatility with data or news? No, we don't. So the likelihood of technical analysis playing out without fear, hype, and greed, because we don't have any data to throw a bunch of fear and hype in here, unless we got some world news data, right? War or something else crazy. Donald Trump used to tweet China 4 years ago, and man, the market would go bonkers, or the word tariff. It was fun times. So Monday, standardly between psychology and technical, we could assume that technical is going to play out heavier than psychological today, whereas tomorrow, when we get the PPI, right? Fed speaks, and a couple other little, earnings plays coming into key one. I don't think there's any big ones coming up, but, tomorrow, heartburn. We do have at least a 7:30 a.m. Central PPI to get some more data in the candles. Now, biggest one is obviously going to be CPI. So we know tomorrow, Tuesday, is usually like a choppy, ugly day. Doesn't really get a whole bunch of follow through because the market's waiting on CPI. We got Empire State Manufacturing, which is not that big of a deal, but tons of Fed speaks after the CPI. So we're going to see what that follow-up does. Initial claims always Thursday, unless we got holiday, business inventories, housing market, and then, of course, just housing permit starts and then industrial production. Nothing crazy on Friday. But the biggest of the big, obviously being CPI, and we got the balance sheet a little bit there late Thursday. Those are going to be big key factors. So moving into technical analysis states, technical analysis has a higher probability of working out today because there's not an outside force pressuring price action like news, data, which creates hype, fear, and greed. So our technical gap right here was the number one thing to watch today on the SPY, and that was our over-under choice during the day trade if we got down there. So we opened up, the market held that daily gap we talked about, and that's how we got our upside back to the 100 EMA, and that's why I was leaned more macro long as we're above 575.64, which we had seen that get defended here multiple times, once live, 2 different times here in the pre-market. So with that algo driven all the way back up, we had the 1618, so you got to do different legs on both of these, and I'll give you guys this one here on the 5-minute high-low. Anything above or below the golden pocket here, high-low, extend that to the right, would have got you to the 1618 for the day. So that's how we usually play algos. That's why we play high-low ranges. That's how we use Fibonacci structure here. So we use the oscillation indicators to create momentum biased, which momentum biased is to the uptrend because the RSI has spent more time above the halfway point, 50. Same with the MACD. MACD is not spending any time under the zero line, right? That momentum is there. So anything above the golden pocket long netted you the 1618. Of course, we said the 100 EMA back test anyway, so that was right there paired up. So 580.17, 580.03. We're very close to the same target. So once we broke out of the top of that algo range, because we love to draw fib boxes like so, we break out and hold above. And 1618 is our general target. And if 1618 does not chill out, it's right to 583.31. Okay. So what do we see moving on to tomorrow? Well, it can be a choppy, kind of low-flying day. So this could actually just do a whole lot of nothing. And it can move into the same range in which we see today, right? So today, as in, it could come back down, chop that 100, maybe stay around that 581, 580.50 because it's a day leading into CPI for Wednesday. So Tuesday's not going to be some big firework day, I don't think, where we're going to get some huge outsourced news or, back and forth for world catalyst, which we're not just going to run into. Last but not least, I will cover the VIX real quick. This was another big one where the volatility index had a couple different options to help us with bias today. Well, we talked a lot in my group about the cluster gap that we had here on the volatility index. We have a triple cluster gap near 21 and then 2035. So I told my crew here, once I seen this opening push, the over under, of course, you can't do technical analysis on VIX according to everybody else on YouTube, but apparently we can here with the most basic of the basic indicators, no custom anything, just algos because, well, we understand algos here. So people tell you can't do technical analysis on the VIX, and watch this. It's very silly. We do this every day. So we had the gap here in the pre-market. We said best case scenario is if the VIX would pop up, hit that gap, and launch itself down into the cluster gaps. Well, we didn't quite get the gap fill that we wanted at $21.63 or so up here. But once we broke into the daily gap, which is that gray range you see right here, because the VIX started very high today, we had an opportunity to crack into that daily gap and then, of course, fill and go down. I noted to my crew before I left, I noted one more algo to aim for, because I get off at about 10 a.m. or so, because we don't trade the pre and trade everything else. I noted this algorithm right here that the VIX could get to under 2035. So at the open here, notice where the VIX was the whole time. We broke under 21 algo cluster, back tested 21 algo cluster perfectly, but don't worry, you can't do technical analysis on VIX. Came down to a lower low, lower high, trended down, found itself on another gap, which is the gap target. So lo and behold, another algorithm gap at a prior algorithm gap. Magical, right? Breaks down out of the daily, and then we have our 1954. So I said if it does go under 2035 and we get some speed, your next target is 1954 for the VIX. Continue holding the long because we are bull-sided macro. As you notice, we do have this guy right here to worry about now as well. So we did create a couple more gaps for when we get the trend. This gap will stay open. This gap will stay open. They will be very important to us here at Boiler Room Trading as we move forward, looking for, there's actually one right here too, directional plays for the morning. So I'm going to pay attention to that guy too. So what the volatility index told me was we did start very high in the day. We were pressured outside into the +1. And in my narrative on the volatility index, on the 5-day deviation, when you zoom out here, you see that last 5 days, the VIX has very troublesome momentum through +1, -1 deviation. So if this is my center line 0, this is +1 on the standard deviation, +2, +3 in the blue. It's in an uptrend, -1, obviously on the bottom here, yellow, -2, and inadvertently 3. When the VIX pushes into a +1 or a -1, it has a very hard time without catalyst, right? Psychology catalyst trumps technical every time, right? Fear, hype, and greed. But technical, since we didn't have anything going on from a psychology standpoint this morning from the news, we had only technicals. That means the VIX was going to have a very hard time staying outside of a +1 range. If we have CPI and the VIX runs and it's, the end of the world that goes up +3, we know that's coming, right? Hype, fear, and greed is a psychological catalyst. We still have an algorithm disposition way up here on a cluster where I know the VIX is going to come back up to 2335. That might be for the CPI's continuation. Won't be right now because the fear, hype, and greed is not going to allow us to get outside of the 5-day +1, -1 deviation. So again, if this is center, the VIX started up into the +1 today, leaked itself away, and we had downside targets saying cluster gaps. Because if you look back here, this price action never came up to any of these gaps at any point in time. And then what did the VIX do? It gapped over the algorithm clusters, okay? And they started up here. What did the VIX have to do? It creates a magnet. So 21 has a magnet to it, right? So this beautiful magnet you draw like that, it shoots lightning bolts at the price action, and it drags the price action down like a magnet to these algos of 21 and change their 90s, then 2035, and then the last one I found today was 1954. So we had not one algo target, not two, but three algorithm targets to the downside, and the deviation helped us with the bias of, hey, we're overbought, 22 psychological just hit, and we're above +1 on the deviation, and technically, without catalyst of psychological hype for ingredient, it's very hard to stay. So the VIX is now coming into -1 support. It could range back up a little bit. We could even see above $20 for this gap fill. And then we'll see what it wants to do, because the VIX most likely will do some chop, just like the market will tomorrow. And then if we see upside of the VIX and it slowly mounts like 19 and holds 20 again, the CPI might be the catalyst to shoot us up to the next layer of clusters we need for Wednesday. We're obviously going to take a look at that and trade this live like we always do tomorrow, and we're going to figure that out. So that was our entire trade recap for the day and how we found our over-under levels and what our macro bias was. If any of that sounds good to you guys and you'd ever want to join us for our live trade, the link is in the description for our website. Come sign up and trade with us live in the Discord. If not, tune into the next video. See you then.